Hi, my name is Steve Clapham and welcome to the latest video in our attempt to teach you how to overcome some of the mysteries of finance. Now, the problem with finance is that everybody who's involved in our industry has got a vested interest in making things sound really complicated. And in my view, that's not necessary, because in actual fact, in order to be a successful investor, you only need a small amount of knowledge and a lot of common sense. So what I'm going to talk about today is I'm going to talk about the balance sheet, the cash flow and the income statement and how they fit together. Now, this is something that even my professional investors sometimes get confused about. And it's simple. It's not completely simple, but it's not difficult. And let me try and explain. Before I start, can I just remind you that we've got lots of really great material on our website, behindthebalancesheet.com. And if you go on there and you press that little sign up button in the top corner, in the top right hand corner, you'll get free newsletter, probably once every couple of weeks. It's not going to swamp your inbox. And in my opinion, they're really good, but honestly, they are really good. So what am I going to talk about? So the balance sheet is at the heart of the accounting system, right? And the balance sheet is always balances. On one side, you've got assets, and on the other side, you've got liabilities and equity. Now, I'm not going to teach you how to suck eggs. I'm not going to go right through to the beginning, but this concept of how the income statement, the cash flow, and the balance sheet fit together, I think is really important. If you don't know what a balance sheet is, please go learn that before you watch my videos, because we assume a kind of basic amount of knowledge. So obviously in the income statement, you've got income, expenses, and that gives you your profit. And the net profit for the year increases the retained earnings in the balance sheet. Similarly, in the cash flow, you've got three elements to the cash flow statement. You've got cash from operations, cash from investing, and cash from financing. And the sum of those three, the investing's usually a negative item, the sum of those three will give you the total movement in cash. And that movement, broadly speaking, not exactly, will show you what the movement in cash on the balance sheet is. And these three statements do link together, right? And if you look at an example of a transaction, I'm going to explain to you how they fit together now. So let's assume that you go out, you've got a factory producing widgets, and you go out and buy a new widget machine. Well, that new widget machine is represented by that asset addition. And of course, when you buy an asset, that gets added to the fixed assets line. But let's say you paid for it with cash. You've got cash out, so you'll see a reduction in your cash balance. Now, that cash out might not happen for a while. You might initially have an increase in creditors, so that will mean you'll have an increase in your liabilities. But as you go through the year, you'll earn some money from that asset, and you also have some expenses from operating it. One of those expenses will be depreciation. And the depreciation reduces the fixed asset. So you might have a machine that costs you £100 million or $100 million. You're going to depreciate it over 10 years. So in the first year, you'd have a 10 million charge. And that would go in the P&L and in the balance sheet. So the point of all this is that these three statements fit together. So you can always track the movement in the P&L versus the movement in cash by looking at the balance sheet. The balance sheet may reflect the difference between a cash expenditure and an expenditure in the income statement, because you may have an accrual. An accrual would be an expense which you haven't yet paid for. So that is just a very quick introduction to the way these three statements fit together, because I've had a lot of people find this very difficult, and I thought I would do a quick video to explain. Thank you for watching. Don't forget to subscribe to the channel, and please sign up on our website, behindthebalancesheet.com, and get our newsletter and get access to our free library. Thanks for watching.